From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney, and I'll be joined shortly by my extra special guest, Henry Jennings from Marcus Today. I'll just lay the groundwork to give you an update as to where we are finishing this Monday session, a shortened trading week, and you know why here in Australia. We've got the COB Australia Index looking pretty good, you got to say, up by 1.7%. So really did get, a wobble, you could say, on Thursday, Friday, inspired by that change in rhetoric coming from the FOMC. But today, going from strength to strength, and if I take a look at where a lot of the strength came from, look no further than CBA, up by 2.3%, Westpac up by 2%, Macquarie putting on 2%. In fact, it is just a sea of green. It's nice to say that when you consider we've got Christmas just around the corner. All 11 sectors are higher today. The financials are leading. The A-REITs are looking good. Consumer discretionary. It's just all happening out there. So we'll check in with the S&P ASX 200 and the final figures there in just a bit. So it appears as if Santa may be showing up. Of course, I had a chat with Julia Lee from FTSE Russell, and she was saying that traditionally the Santa Claus rally actually is from around now or the 24th through New Year's. So we'll see if we can continue with this momentum, part of which came from the fact that we did see an inflation read that didn't ring any alarm bells on Friday in the United States, and perhaps a bit of bargain hunting moving in here today. Although, boy, you gotta think that CBA isn't much of a bargain at where it's trading. Currently, I had the pleasure of hosting the call today, and NAB was one of the customers, was one of the companies that we discussed. So if you'd like to check out that edition of the call, we had a lot of big caps, but a couple interesting smaller companies as well. Now, it's not a listed company, that being Foxtel, but we have seen a UK streaming service swipe in, buy it up, and I just thought I'd look at News Corp's share price. I'm sure we will in a second, but doing well off the back of that, up by 3.5%. So end of an era. I used to work at Foxtel, but look, it is just a reflection of what's going on in the broader media market. We know that media companies are doing it really tough, particularly those that are publicly listed. And gold, keeping an eye on gold. Of course, lots of talk about bond yields, where they're headed, what will happen in 2025. Maybe I'll ask my guest, Henry Jennings, about that in just a moment. Here's a snapshot of the banks in case you didn't believe what I was just saying. CBA putting on 2.3% and trading up at 154.33. Retailers are looking good. I was at Pitt Street Mall today just for a moment, and it was busy. JB Hi-Fi putting on 3.4% to $94.96. Another story from 2024. How resilient some of these retailers proved to be. Into the A-REITs, again, a sector that outperformed today. Charter Hall up by 3%, Dexus 3.7%. We could go on, as I said. We have all of the major sectors in positive territory, but we've been keeping our eye on the ASX. It was actually the stock of the day, so we'll get some analysis on that in just a tick. But software glitch halted the settlement of transactions, but everything went through okay today. And News Corp Telstra paying, selling Foxtel to Dazn. I think that's how you say it. I'll have to find out for sure. DAZN, all capitals, in a deal totaling $3.4 billion. EML, check that out. So terminating its MD and CEO Rob Hines' employment effective the 21st of December. So that's a red flag, and market has treated it accordingly, off by 22, close to 23% today. Pro Medicus going from strength to strength, inking a $30 million 7-year deal with Dooley Health and Care in Midwest of the United States. So Visage 7 unified imaging platform will be used throughout the system. And Austal won a $137 million contract with the Australian Border Force. And I had a chat with a gentleman called Anthony Kavanagh from Chester Asset Management. Austell featured in that conversation. It's well worth your while going and having listened to what he had to say. So talked about Austell, Aurora, and a couple of these Aussie biotechs, Neuren in particular. All right, let's get a view from Henry Jennings from Marcus Today. The hat's not on, but I still see the decor. Thanks, Henry. You're one of the few that are still kicking at 4 p.m. on the Monday before Christmas. How do you rate what happened in this market? Like, could we be seeing sort of outsized moves because there's such low volume?
Hi, Nadine. Happy Christmas to you and all your viewers. Yeah, I think, let's face it, last week was pretty nasty, wasn't it? 2.8% down for the week. It was the Grinch week on the back of the Fed. I also think there was probably a bit of spooking going on the back of that ASX chess issue that was out and about, and that has been solved. So that certainly helped sentiment today, as did that resolution of the US debt ceiling as well, with no government shutdown, at least temporarily. At least till I think it's till March, at least they've averted that. So the news was good. We are in the Christmas period. Volumes are a little lighter. We have seen the banks rebound quite considerably. They look dead and buried on Friday, with a lot of people locking in those gains for the year. But here we are back with CBA up 2.5%, the index up 125 points, and everything in the world is right again. So yeah, it's been a good day, I have to say. The resource is still missing out a little bit, the big end of town, BHP and Rio, but the rest of the market has looked pretty good. So yeah, it bodes well for the next few days, I guess. Tomorrow we've only got a short day, but back again after Boxing Day. So it's possible, with no news out there really to interrupt the market, the path of least resistance could well be up for another few days. Yeah.
Okay. So what we've learned through 2024 as well is that momentum works. When it comes to next year, Henry, look, we've had a number of chats lately that it could be sort of the year of the miner, like that real shift happening from banks to resources. Fortescue was rated a double buy on the call today, so you'll have to discuss that next month when we meet again with the investment committee. What's your view on resources?
Well, Nadine, we've talked about this a little bit. And if you cast your mind and your viewers' minds back to this time last year, the banks were not doing an awful lot. Everyone was pretty down on the banks because of the COSI lives pressure, the bad debt potential, high interest rates, etc. And we've seen this year that although it has come to pass in some respects, the retailers are going gangbusters. I did my bit for JB Hi-Fi earlier today, I have to say. So I've certainly done my bit for shareholders there. And here we are, fast forward a year, and the resources look in that same sentiment hole that the banks were in last year. I'm not saying that we're going to have some sort of resource boom, because there's clearly some headwinds with China, the tariffs, Donald Trump, his war on China, etc. So there clearly are some headwinds, but the sentiment is so negative. It wouldn't take an awful lot of good news, and maybe we will get some good news, to really perk that sector up, which is something we saw in the banks. So I'm looking for a much better response from resources this year. The golds have been good, but they haven't really displayed the leverage we would like to see from gold miners, given that Aussie gold is nearly $4,200 an ounce. That is a huge price. Many a miner will be not drinking Prosecco this Christmas. They'll be drinking Verve, I suspect, because that's a pretty darn good price, to say the least. So I'm a little bit more bullish next year on resources. We'll come back in a year's time and you can call me a complete numpty and that I was completely off the track, but I just can't see the banks being the same force they were in 2024 and 2025. So I think resources will need and will take up the mantle to some extent and keep pushing the market a little bit. Higher.
Your stocking stuffer pick is up online, Henry Newmont. I'll give it away for anybody who hasn't gone and checked out that series. And look, you've got form. I think Zipco last year, James Hardy perhaps the year before. So yeah, that's up online. Thank you for that. But I had a chart that I played out at the 10 o'clock hour, and it's just, they're called the Batman stocks, Broadcom, Microsoft, Meta, NVIDIA, all of those big cap stocks in the US. Are they going to continue to be market leaders there? Can they continue?
It's a big question, isn't it? I guess the big question for 25 is whether these big guys that have invested huge amounts into AI, we actually see the monetization of that. And that is going to be the key question. And there's an awful lot, riding on that in terms of US performance, because we have seen those Mag 7, those big tech stocks do extraordinarily well. Nvidia, of course, does well because it sells the shovels that enable AI. I think it's going to be more volatile next year. I don't think it's going to be one-way traffic. I suspect we'll get more broadening out of the US. And let's face it, when you've got a mercurial president and an equally mercurial sidekick in Elon Musk, who is the unelected US president, and even Donald Trump had to deny that Elon Musk was actually the president. It's going to be an interesting year, isn't it, for US tech? And let's face it, if Musk gets a hand in it, what's going to be good for American tech, and especially for Elon Musk tech, is going to be forefront of his mind. So, yeah, I don't know if we're going to have it all the same as we have had in 2025, but yeah, it's going to be interesting. I suspect we need to be very cognizant of how these guys are really going to kick the money side of things higher and really monetize the huge investment they've made.
Yeah, it's amazing that the Americans got two for the price of one, it seems, in electing Donald Trump. I wonder how long that bromance is going to last.
Yeah.
We will see. 2025 will be interesting. Okay, so anything that you want to leave us with as investors, like either a lesson that you learned this year, Henry, or something that you're really going to try to do next year, just give us a little insight into where your head is at as we end 2024.
Well, I think given the way the market has changed, the dominance now of in the US derivatives, zero, one-day options. There's even, the growth of ETFs. We've seen the momentum begets momentum, and it continues to go for far longer than you think is rational. And we've seen that even at home with CBA at $160 or whatever they are. That doesn't appear rational. So I think the lesson for investors going into 2025 is that momentum story is going to continue. There's no way that's going to change, and we're going to see more and more AI coming into investment and in terms of making those investment decisions. So I think that's probably the biggest theme here, and that works not only both up, of course, but down as well. And we've seen some stocks come under enormous pressure for no reason other than the sentiment changes against them, and then they just continue to be pummeled, like the likes of Pilbara and the uranium sector with the shorts out there. So I think, as always with investing, you've got to be flexible, but I think momentum is the key still to being successful and not being stubborn. I think if anything, I was probably a little too stubborn this year in some of my picks and some of my themes, which may have been right in some respects, but unfortunately the share prices have been going against them, and maybe use of stop losses would have been far more advantageous. So I guess discipline, be flexible, and follow that momentum as well.
Well, Henry, we appreciate you joining us throughout 2024. We wish you and your family all the best this Christmas, and we look forward to chatting next year.
Thanks, Nadine. Have a great Christmas. Safe travels.
Thank you. You too. All right, back to the stock of the day, which was the ASX. David Lane from Ords and Mark Gardner from MPC Markets. Here's what they had to say.
So, yes, not a good look for the ASX. We haven't liked the stock for a while. We've actually got a lighten recommendation on it, and they're currently trading around that $65 mark. Our target price is $60.70, so we think that there is further downside in it. And it's relatively expensive at the moment, trading on a PE of around 26 times. So for a company that really has to invest a lot in new technology, fairly expensive, I think, at the moment.
But look, I think, I'd be selling it at this point in time, particularly from a long-term standpoint. If it does sort of, I think from a short-term point of view, if it got really hit and you were getting it at really cheap valuations, there's no way that monopoly is disappearing in the next couple of years. M&A activity and IPO activity should start to head up a little bit. The clearinghouse obviously takes a larger clip with the higher interest rates for longer as well. So there are some positives, but what I'm really they've missed earnings the last the last 4 times they've released earnings in a row. We're in a pretty horrible downtrend. You would definitely not buy it here. I'd be, as David said, at least lightning. But it might be one that, it is a necessity for at least the coming couple of years. But the more of these instances that happen,
Weaker footing it's on.
well, it just becomes,
it also
it's
costs a All right, let's get across today's leaders and laggards, starting with those well into positive territory. Deep yellow, we're looking at you, PolyNovo, Super Retail, Zip, and Boss Energy. Really interesting to see that snapshot, as we end out the year. So real theme with uranium, some of those high growth companies, including PolyNovo, Zip, and then what Henry was just referencing, the fact that the retailers had not a bad year at all, thank you very much. And there was also a court case that got resolved around Super Retail, so its shares are up by 5%. The laggards, though, Clarity down by 9.5%, SiteMinder, Light & Wonder. Again, some of these companies were market darlings this year, perhaps a bit of profit taking. Arcadium Lithium and Strike Energy on the list. Strike is a very volatile stock. Here's Fastbricks. It was out with an update on one of its, trials, sort of in the United States, up by 22%. BrainChip up by 20%. And AI Media Technologies, its managing director, continues to buy shares in the company. So an endorsement there, up by close to 10%. Flipping the page, and EML Payments, we said after making those C-suite changes, Vinyl's gone well this year, but it's down by 9.5%. Retail Food Group off by 7.7%. Okay, let's get across what's on overnight. Not much. So we do have the U.S. Chicago Fed National Activity Index, as well as the Conference Board Consumer Confidence Read, both for the month of December. Tomorrow, nothing big here, although we do get the board December meeting minutes. So it'll be interesting to parse those and see where and how the commentary coming from that 2-day board meeting changed. All right, so final figures. We've got the S&P ASX 200 closed for business now, and we've got the market finishing well into positive territory. Similar moves to what we saw in the COB Australia Index at 8,201, up by 1.7%. Looking at E-minis in the States, NASDAQ and S&P 500 E-minis are looking pretty good, and around the region, a mostly positive day as well. The Shenzhen Composite is the exception to the rule, but the Nikkei up by 1.25%. The Hang Seng, as it trades right now, up by 0.6%. So look, it's going to be a quiet one out there tomorrow, but we will be here through the morning hours to take you through the call as well. So we've got one more chance to see each other between now and the end of the year. In the meantime, please catch up with anything you may have missed on ausbiz.com.au, and we look forward to seeing you tomorrow morning.